Today we're going to talk about top 5 very important but not so obvious home buying mistakes that can cost you thousands of dollars, and in the markets like New York City, even hundreds of thousands of dollars. If you're a buyer and have done any sort of research, you've probably read or heard about those generic home buying mistakes that you can see in every article or in almost every video. This video is different, so watch it till the end to make sure you are aware of and not going to make those not so obvious mistakes. If you appreciate all the work that goes into making this type of content, do me a huge favor and hit that like button. But don't be like this guy. Just gently tap that like button and subscribe to the channel for more New York City real estate videos. Now, without further ado, let's get to the video. This video is mostly for New York City specific market. Here, things are way more complicated than anywhere else in the country, because apparently we don't like simplicity in New York City, so why make it simple? But if you're planning to buy a home somewhere else, you will still find a lot of useful information in this video about buying a home in general. Before talking about those important non-obvious mistakes, let's briefly go through the generic home buying mistakes just to refresh your memory and get those out of the way, which are: number 1, not working with a real estate agent. In some very specific cases, it might be better to be on your own and unrepresented if you are very experienced and know exactly what you're doing. I already made a video titled Buying an Apartment in New York City Without a Real Estate Agent. It is a very important video to watch to understand the full buying process from the beginning till the end, especially for those of you who are first-time home buyers and not planning to work with a real estate agent. Number 2, buying more home that you can afford. This is a terrible mistake, and people in this situation become what's called house poor. This term is used to describe someone whose homeownership expenses such as mortgage, property taxes, utilities, and maintenance make up a huge portion of their monthly income. Basically, people in this situation work only to be able to keep up with their housing payments. No vacations, no nights out, no discretionary spending. You don't want to be in this situation. Number 3, not inspecting the property. This is considered a standard home buying mistake, since obviously it can cost you a lot of money if after you complete the purchase you discover that your home needs some expensive repairs. However, in New York City, the inspection situation is a little bit different depending on what type of property you're buying. And I made a full video on this topic as well. So watch that video for a better understanding of the inspection situation, specifically in New York City. Number 4, not budgeting for closing costs. Well, I'm sure it's not a big surprise if I tell you that buying a home requires more money than just your down payment. There are closing costs and different fees that you'll need to pay depending on the market and the type of home you're buying. I also made a full video explaining all the closing costs in New York City. So feel free to watch this if you want to know how much closing costs you need to budget for. Number 5, not getting a pre-approval letter before starting the process. Of course, if you're buying, you need to know how much you're qualified to borrow in order not to look at the properties outside of your budget. But I'm going to put little asterisk here because in New York City, this mistake goes beyond just being approved for a mortgage. We'll talk about it soon. And number 6, having unrealistic budget and expectations. This is when the buyer's budget doesn't match their expectations, and their desired homes that check off all the boxes are in a totally different price point. This can be a complete waste of time, and buyers in this situation experience a lot of disappointment, because after seeing all those beautiful homes, the ones that are actually within their budget look terrible compared to their dream homes. I'm going to put an asterisk here too, you'll see why later. There are of course more, and every mistake has its own sub-mistake, if we can call it that way, but those are pretty much the generic ones. Now this is where the topic of this video starts, non-obvious mistakes. So let's say you understand the importance of having a real estate agent. You are going to hire one and avoid the first generic mistake, which was not working with an agent. Well, that's great, but the first non-obvious mistake we're going to talk about is working with the first agent you meet without properly interviewing them. I see this happening all the time. You might meet them at a social gathering or at a random open house, or you might put your information in any home search website and someone just responds to your inquiry. I already made half an hour long video explaining how to interview an agent, which will be linked in the description below. You can watch that because in this video I am not going to talk about the interview process and how to hire an agent. I just want to emphasize the importance of properly interviewing your agent before committing to anyone. You might get lucky and that very first person you meet might be a great agent and will successfully complete your transaction. But you need to make sure you are working with the right agent, because you might end up buying the wrong place or paying the wrong price or losing the home of your dreams because the agent wasn't able to successfully find, negotiate, and complete the transaction. And if that's the case, your buying journey, instead of being a fun and enjoyable experience, will be full of stress, anger, and frustrations. So be careful and know how to hire a real estate agent. The video is ready for you. All you need to do is watch it. Another variation of this hiring an agent without interviewing them mistake would be hiring an agent based on his or her personality only. Now, the truth is, personality is very important. In that video, I talk about 3 decision-making factors when choosing which agent to work with, and one of them is the agent's character and personality. But the reality is, they might be a great person who you can be friends with, hang out, maybe go to dinner party, movies, and enjoy other similar fun activities. But just because they have a real estate license and you like to hang out with them doesn't mean they're the best agent who can help you buy your home. Their experience, skills, and knowledge is also very important. Again, this video will give you everything you need to know to avoid those 2 mistakes. Moving on, in case you still are not going to hire an agent, or no matter what, you're going to work with your cousin or your friend who just happens to have a real estate license on the side, the next mistake to be careful of is not following the right step-by-step process. Buying a home is a step-by-step process, and in order to successfully complete your transaction, you should not only know the steps, but you have to go through those steps following the right order. A quick analogy to better explain my point is when you're trying to cook dinner, just knowing the ingredients needed for that specific dish isn't enough. If you fail to follow the recipe when cooking, it can cause you to end up eating something that tastes like shit. It can cause you to end up eating something that doesn't taste very good. The principle is the same as completing any other task, from brushing your teeth in the morning to performing the most challenging and complex surgeries. You need to follow the right step-by-step process. When it comes to real estate and buying a home, there are going to be other professionals involved in your buying transaction, not just you and the seller. So you also need to know what is happening at every step of the process and which professional is involved during which step. For example, the inspection is done when you have an accepted offer and before signing a contract. Preparing your board package is after you have a signed contract. This is if you're buying a condo or a co-op. The attorney due diligence and contract negotiations start right after you have an accepted offer. But you already need to have an attorney ready in the first place when you're in the process of gathering your team. When you're in the process of making an offer, you should have had all your documents ready in advance. Once you have a signed contract, you need to immediately go back to your loan officer or mortgage broker to start your underwriting process, finalize your application, and get the loan commitment letter in a timely manner. This is, of course, if you're financing. All cash buyers have the luxury of skipping the whole mortgage application step and being able to close a lot faster. This not following the right step-by-step process mistake is very common amongst buyers who try to do this on their own and don't work with an agent. Or this can also happen with buyers who work with the wrong agent. Mistake number 1 and 2. I see this often in the transactions where I'm the listing agent representing the seller and talking to a direct buyer. For example, in one of my listings, I've had a situation when buyers asked if they could do an inspection after they already signed the contract and we were in the process of submitting the board package. Sure, they could do an inspection, but the contract was signed a while ago, so the inspection would give them nothing more than just an information about the property, which they should have done it before signing the contract if the plan was to have the sellers fix the items discovered by the inspection or get a credit. Or another example, when buyers lost the deal because they tried to do an inspection way too early. Before that buyer's uncle, who was a contractor, visited the apartment twice to inspect every single detail, someone else made an offer and the contract was signed promptly. I get it, everyone has a fear of buying something that requires a lot of work, but especially in well-priced hot listings that get a lot of traffic, it's very important to do every step in a correct order and in a timely manner. What they should have done is, after seeing the property, they should have made an offer with all appropriate contingencies in place, then negotiate it, and after they had an accepted offer, conduct an inspection. Or a buyer who made an offer on one of the apartments I was selling, got an accepted offer, but it took him 2 weeks to finally find an attorney and get back to me with his attorney information. But guess what? We already had another offer, and that second buyer was being represented by a professional agent, and they had everything ready to move forward. He was unresponsive during those 2 weeks, and after I notified him about someone else getting the apartment, he told me that he was busy working on the board package. I can give you more examples, but you get the idea. Follow the right step-by-step process and have everything ready to be able to move forward to the next step. As you might have guessed by now, I have a video talking about the 10 steps of buying a home in New York City following the correct order, which is also linked in the description below. Had he watched my video, he would have known that the board package comes after you have a signed contract, and it's very important that you have your team of professionals ready in order not to lose the deal. Next, let's talk about having unrealistic budget and expectations. In New York City, this mistake goes far beyond just being qualified to take a certain amount of mortgage. This happens a lot, mostly with buyers moving to New York City from somewhere else. But it can happen with New Yorkers as well if they don't know how New York City real estate works. Here, if you're looking to buy an apartment, two most common types of properties you'll see are co-ops and condos. Every co-op has its own financial requirements. Just because you're pre-approved by your bank to get a certain amount of mortgage doesn't mean that's all you need to buy a co-op in New York City. Typical New York City co-op buildings requirements are way more strict than the requirements of your lender who is ready to give you a mortgage. Co-ops can require not only a minimum down payment amount, but also what your DTI must be, which stands for debt to income ratio. If your debts, including your future housing payments, are going to be higher than the building would like to see in relation to your income, your purchase will most likely be rejected. Co-ops also look at your post-closing liquidity, which means how much liquid assets you'll have after you complete the purchase, after paying the down payment and all the closing costs. So again, if the money you'll have available isn't enough and doesn't satisfy the building's requirements, there is a high risk of getting a board rejection. Other restrictions can be whether or not you're allowed to have any gifted money, whether or not you're allowed to have any co-purchaser, and a few other ones. Some buildings can be more strict than others. For example, generally speaking, 20% minimum down payment is what a lot of co-ops require. But there are some co-ops that allow 10% down payment, and there are co-ops that might require as much as 60% down payment. I have a detailed video explaining all co-op financial requirements, and I highly recommend you watch it, especially if you're buying in New York City for the first time. Condos don't qualify the buyers, and you have more flexibility when it comes to your DTI and post-closing liquidity. But condos might have a minimum down payment requirement, which if they do is mostly 10%. But in New York City, there are way more co-ops available than condos. And generally speaking, condos are more expensive to buy and carry compared to a similar type of apartment in a co-op building. The point is, talk to a local agent who knows New York City market well, who has done enough condo and co-op transactions, and will make sure you're not wasting your time starting your home buying journey with unrealistic budget and expectations. Speaking of talking to a local agent, there is a link in the description of this video where you can schedule your free consultation call with me if you're looking to buy, sell, or rent here in New York City, or if you just have questions regarding New York City real estate. And the last mistake we are going to talk about is buying a significantly less apartment and not considering any potential change of your housing needs in a short term. In New York City, not only the cost of ownership is high, but also the cost of transaction is very high. When you buy and sell real estate, you are going to have closing costs. And if for some reason you need to sell your home shortly after you bought it, you might lose significant amount of money. There is no magic number of years that you should keep the property that works for everyone and in every situation. It all depends on the type of property and the market at the time you're trying to sell. But in general, the longer you're able to keep, the chances are high that your home will gain enough equity to recoup the expensive closing costs. But this is not the case for every type of building. And here comes the complications of New York City real estate again. The resale values can be different for every building, and the appreciation doesn't work the same way for the buildings that have tax abatements, or land-lease buildings, or HDFC buildings. Land-lease buildings are basically the ones that don't own the land they're built on. The building owners lease the lot underneath. As a buyer, your budgeting and risk assessment processes are different and way more complicated if you are considering a land-lease building. HDFC stands for Housing Development Fund Corporation. Those co-ops are income-restricted buildings, which means you cannot have more than a certain amount of annual income in order to be qualified to buy in an HDFC building. They might have expensive flip taxes and restrictions on pricing when it's time for you to sell it. So always consult with a professional to understand what to expect when it's time for you to sell your home. But back to this, buying a significantly less apartment mistake means basically when buyers think short term. Again, there is no specific number of years that you must keep your home that works for everyone and in every situation. But for example, you might be okay with buying and living in a studio apartment right now, but what would be your housing needs in 2, 3, 5, or 7 years from now? If you're buying a significantly less apartment, it might seem safe since this is the complete opposite of buying more than you can afford. But in some cases, this can be a mistake and lead to a serious financial loss. If 1 or 2 years later, after you bought your home, you're facing a situation choosing between selling and losing money, or continue living there without being comfortable or happy because your housing needs has changed. Sure, one solution can be to rent out your apartment, but if you bought in a co-op building, you also need to follow the building sublet policy. And on top of having restrictions on the number of years you're allowed to sublet your apartment, a lot of co-ops can also charge a sublet fee. Condos can have sublet fees as well, which means if you overestimated the rent that you can charge and underestimated the expenses, the rent payments you receive might not cover your mortgage and other carrying costs, depending on your mortgage, taxes, monthly maintenance payments, and sublet fees. An example I can give you is the situation I had recently when someone came to see one of my rental listings, which was a 1-bedroom apartment. At the time, she lived in a studio, which she bought about a year and 2 months ago. But she told me that she could no longer live there because she needs more space. And that's why she's in the market of trying to rent a bigger apartment and is planning to sublet the one she owns. When we got into more details of discussing the co-op rules, the first problem was her co-op allows subletting only after 2 years of ownership. So she wasn't allowed to sublet her apartment for another 10 months. On top of it, the sublet policy is every 2 out of 4 years in her co-op building. So even if 10 months later she's able to sublet her apartment and let's assume cover the cost of ownership and rent bigger apartment which fits her needs, after 2 years she either needs to go back and live there or keep it vacant for another 2 years before she can sublet it again, or she just needs to sell it. If this whole sublet rules and restrictions are confusing, just watch this video where I explain the co-op sublet policy in details. But the point is, if you don't think a little bit long term and only think about what works for you today, you might face a difficult situation and potentially lose money if your housing needs change shortly after you complete the purchase. That's it for today. If I was able to provide you any value, like the video and subscribe to the channel, and don't forget about the link in the description of this video to schedule your one-on-one call with me. Thanks for watching. Until next time.